right, good morning. I'm Larry Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics behind the biggest moves in the stock market. It is presented with comedic common sense by an expert in financial literacy. And hey, that's me, Larry Steinhouse. And by the way, if you're wondering what's going on, we had a bunch of technical difficulties. We're working through them right now, as a matter of fact. But hey, I wrote the show. I thought I'd do the show. So let's do the show, right? All right, so today is Friday. It's April 1st, and it's President's Day. Yeah, that'll hit you in about a second. There it is. You're welcome. All right, I want to welcome you to the show. Of course, we're not live right now on WWDB AM. We had to run a repeat because we had the technical difficulties, but we're going to run this show today for you guys. So you're watching us on Facebook, you're watching us on LinkedIn and Twitter. Hey, let me know what you think of the new set that we've developed. We kind of modified it a little bit and made it a little bit better. I think that spinning globe is awesome. So you can also thank Mike for that one. And I think that's pretty cool. So check it out. Let me know what you think. All right, if you're watching online, please hit that like button. Please hit that share button. And don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. Hey, you can also comment live during this show. You can comment live on Facebook, LinkedIn, and Twitter, and please say hi so I know you're watching. And by the way, of course, if you're commenting from a group and it's not the Money Chat Now page, your name might not show up my dashboard, so please go to the Money Chat Now page and comment there so I can recognize you. Money Chat Now, of course, is brought to you by Investor Schooling. And you can attend a complimentary class this Thursday by going to investorschooling.com, and there you will learn about real estate investing and stock options trading from those who do it every day. All right, on today's show, we are going to be discussing, of course, the futures. We're going to be discussing energy rationing. We're going to be talking about oil reserves, auto sales dropping, and, check it out, April business. Mike's watching online, and he just got the joke. It just took him a minute. Welcome to President's Day. It's April 1st. Get it? Aha! Aha! All right, whatever. Anyway, all right, let's go back to today's futures. All right, real quick, let's take a look at the futures right now, and then we'll talk about what happened. So right now, the futures are up 202, the S&P is up 27, and the NASDAQ is up 114. Isn't that cool? Don't you like that new view? I love this new view. All right, let's talk about what happened yesterday. Yesterday was pretty much went the way I would expected it to. You know, it started off low, and as I predicted yesterday, the turn for the worse happened around 12 o'clock. So why did it happen? Well, you can't blame it on oil because oil dropped to just over $100 a barrel. You can't blame it on interest rates because the interest rates also dropped just a bit. And you can't blame it on bad earnings because there weren't any notable earnings. And you can't blame it on any surprises. So what was it? Look, it was the simplicity of the steak and tuna theory I developed many years ago. In the case of yesterday, the money managers simply wanted to get out basically as high as they could to book profits on the funds, right? And these funds they manage, and when they make their money, they get to have their stake. It was the end of the quarter, it was the end of the month, and it was right before the end of the week, so it all went together. The finish had the Dow down about 550 points yesterday. Ooh, I usually hate those days. However, my holdings, AAL and CCL, actually went up. So it was kind of an up day for me yesterday. I'm pretty happy about it. In fact, all the cruise lines were the top 3 picks yesterday. I've been saying it, I'll continue to say it, the travel industry will have a major comeback this year, and you should be in it. The quarter, however, was the worst quarter since 2020. January, however, was the big drag on the quarter, not March. March actually reacted like it usually does. It did pretty well, and at the end of the month, it was the end of the month, and the end of the quarter also reacted about right. It's the new quarter, and earnings season starts in about 10 days, so that should make this month rock. Look for any dips and buy them. I love earnings season. It's like my Super Bowl. You know, I have my stock screen up my wall, and I wait for each company to announce their earnings while I drink beer and eat popcorn. When the earnings are good, I jump up and down, and the popcorn goes everywhere. When the earnings are bad, I go home with my tail between my legs and have an extra beer. You know how it is, right? Another thing to worry about that happened yesterday was, of course, the inverse yield curve. I discussed this the other day on Tuesday's show, and if you want to go back and watch or listen to it, you'll understand it. But this time, the 2-year yield topped the 10-year yield. Look, things like this often happen before a recession. Reports say that when the curve inverts, and just so you know, there's been a better than 2/3 chance of a recession at some point in the next year, and a greater than 98% chance of a recession at some point in the next 2 years. Well, duh. I know there's going to be a recession in the next 2 years. I've been saying it for the last 7 years. So who really cares what these people say? We all know what's coming. It's kind of obvious, right? So the downturn has already been quietly happening. I said it before that this spring is going to be the last good year for real estate. I have to laugh when Zillow sends me emails with how much my properties are worth. Yeah, maybe for a minute it's worth that, but it ain't worth that now. When people say that the housing market will tumble 20%, I laugh. And then I realize that if they're using Zillow's estimates for today and compare them to Zillow's estimates 2 years from now, they're probably right. It probably will be 20% difference. The way some market pros believe, some market pros believe the 3-month yield to the 10-year yield is a more accurate recession, and I agree. If you start to see the 3-month yield being higher than the 10-year yield, boy, are we in problems. And by the way, that curve hasn't even come close yet. And that spread's been widening, which, believe it or not, is a signal for better economic growth. We will see, but always remember, you can make money in an up market, you can make money in a down market if you have the skills. I have them, and you can have them too. Reach out to me at Investor Schooling, find out now. And by the way, real quick, the futures are, at this point, the Dow is up 157, the S&P is up 20, and the NASDAQ is up 78. So it's not bad at all. Hey, I want to say hello to a couple of people online, and my apologies to us. We're online a little bit late because we had a couple of technical difficulties, but I didn't want you guys to miss the show. So I want to say hello to Dan, of course. I want to say hello to Mike, and Moshe, and Bill, and, of course, Jeff. So thanks so much. And if you're watching on LinkedIn, YouTube, or Twitter, or anywhere else, please say hi. Let me know you're watching. I know we're a little confused right now, but hey, those things happen when you do a live show. I think it's awesome that we do this live show every day. I write this show, for you guys who don't know, I write this show every morning from here at 5 o'clock in the morning writing this show, and then I go on to do it. So I figured, hey, if I wrote the show, our technical difficulty, by the way, happened right before the show started, and it's just a shame. But I figured let me do the show now that we fixed it. All right, let's talk about energy rationing. When I first learned to drive, there was a gas shortage caused by a war between Iran and Iraq. Actually, the whole Middle East was at war, or at least it felt that way, and we also felt that we were going to be going to war shortly. The thoughts and rumors of World War III were coming up, and the biggest issue was gas shortages or gas rationing in the United States. For those who remember this time, the lines at gas stations were very long, and often you ran out of gas waiting in line to get gas. There were pictures of people pushing their cars up to the pump because they ran out of gas waiting for gas. You know, if any of you remember, the government issued a mandate. Oh, boy, do I hate that word, by the way. But a mandate that called for odd and even days. This meant that if the last digit in your license plate was even, you could buy gas on even days. If the last digit was odd, you could buy gas on odd days. I got to tell you, it was frustrating, and it was frustrating for many. But just know, we now have a war in Europe, and a major supplier of oil, Russia, is being sanctioned by several countries. The countries are all refusing to buy their oil because of their actions in Ukraine. I discussed it on the show the other day how America uses only about 7.9% of their total oil from Russia, so it really isn't all that bad for us. While other countries in the European area depend on Russian oil and Russian natural gas for a large amount of their heating and their fuel supplies. Germany is being hit the hardest, and it just issued a dire warning to its citizens about the possibility of having to ration heating oil and natural gas. Of course, the good news is the area is entering a time where heating oil and natural gas will be used. However, this period of time is when most countries stock up their supply to be ready for the coming winter. The price of heating fuel has skyrocketed, and it's causing mass inflation in the European countries. Well, all of this is leading to the possibility of rationing oil. Some ideas including lowering the speed limits, making public transportation cheaper, and introducing car-free Sundays in large cities. I don't know. Car-free Sundays? Really? By the way, a news flash came up on my screen about the time that I was writing this about the euro and inflation hitting a record high of 7.5%. The next 2 years are going to be very interesting. Runaway inflation and oil rationing are all signs of past times. Will oil rationing happening here? I don't know. It might. And by the way, I'm wondering if you guys would agree to not drive your car on Sundays if it came to that. Let me know in the comments if you would agree to not drive your car on Sunday. It's kind of crazy, right? Man, let me know what you guys think about that. That could be pretty wild. Hey, by the way, I've been telling you guys, and they're selling out pretty quick. I've been telling you about the great event we're going to be hosting at the Washington Crossing Inn in Bucks County. It's a finances and freedom event, and no masks are allowed. Hey, if you feel you need to wear the mask, this probably isn't the event for you. Anyway, along with myself, we're going to have the outspoken Bill Spadia. Hey, I want to let you guys know at 12 o'clock-ish today, around 12 and 12:30, I'm actually going to be interviewing Bill Spadia in a special Money Chat Now. Bill Spadia is going to be coming to my studio, and we're going to be talking about this event, and we're going to be talking about some of the things he has going on. So keep that in mind. It's actually going to be a really great interview. But also at this event, we're going to have Bill Spadia, of course. We're going to have Doug Mastriano as another keynote speaker. And I'm going to tell you, Doug's story will mesmerize you as he is a leading contender in the governor's race for Pennsylvania. You're going to want to be at this event to shake his hand, meet all of these guys. And there's also going to be some bunch of other guests as well. Dan Satofsky will be there talking about raising private funds. And he might even talk to you about how he lost 350 pounds. All right, he didn't lose that much, but he looks great. All right, let's talk about oil reserves. By the way, if you want to go to that event, it's 4mmw.com. Go to 4mmw.com, and you can go there and you can attend that event. Let's talk about oil reserves. I just talked about how oil and home heating fuel may be rationed in the European countries. But let's talk about what's going on here in our country. Well, as everyone has seen, the stickers, if you've ever seen those stickers with Joe Biden pointing to the gas price that have the caption, "I did that," right? They're everywhere. Joe the Bully Biden is getting angry at people putting those stickers on the pumps and getting angry at reporters for calling him out on closing or preventing production right here in the United States. So in order to make himself look good and the other Democrats look good, they have devised a plan to lower oil prices by releasing our oil reserves. Listen up. This is amazing. Just listen to this. This is crazy, right? Biden plans to tap the nation's strategic petroleum reserve for the next 6 months as domestic producers ramp up production. This is according to a fact sheet released by the Biden administration. His plan, listen to this carefully, is to release 1 million barrels of oil per day for the next 6 months. Okay, let's do some math. That would be a total of 180 million barrels of oil in that period of time. Now, the reserve holds oil in case of a dire emergency. It was created to prevent the gas lines and gas shortages we have in the late 70s and early 80s. Now, the maximum capacity of this reserve was reached at 727 million barrels on December 27, 2009. So the absolute maximum amount of barrels is 727 million barrels that they could store. Right? Here's an interesting fact. We the people are constantly being censored, and as more censorship being created by the dictators in charge, I want you to do this. Do a search for Strategic Petroleum Reserve. You will find a website information fact page published by the government. It'll give you facts as to how the reserve is divided, the location of the reserves. By the way, I don't understand how the location of the reserves isn't a security risk, but that's fine. It also has other facts. But when I was reading it, there was a link to another page that should have given you, it's actually a page that says, it gives you the approximate amount of barrels in reserve that's being held in the Strategic Petroleum Reserve. So you click this link, and you can see how many there are. So I was curious, because if you can have a maximum of 727 million barrels being held and use 180 million barrels in 6 months, that means we're at a maximum capacity. So if there was a whole 727, we have about 2 years supply at that rate of use. But please understand, this supply is being used as a subsidy, meaning we don't have anywhere near a 2-year supply of oil. We probably have about a 6-month supply of oil if it's at maximum, right? So I wanted to know how many reserves we actually had, so I clicked the link of the page to check the data, and just like the CDC death count data that used to be really easy to find in the beginning of the scamdemic, the link sent me to a page with a statement in small letters saying, "Our services aren't available right now. We're working to restore all services as soon as possible. Please check back soon." Wow. So there you have it. The Biden administration and the Democrats care more about how they're going to manipulate gas prices into the midterms than they care about a real emergency. And this emergency can actually cause us to need that oil, not this emergency. But then again, who needs oil anyway? Don't forget, we all have electric cars now, and the electricity comes from solar panels on your roof, of course, right? Your electric car, solar panels on the roof. What do we need electricity for? Yeah, right. Sure. All right, guys, let's take a quick commercial and we'll come back with the rest. I will see you in a few seconds. And, hey, I'm hoping you're enjoying this special edition because we're not on the air at the moment. We'll see you in a minute.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start. Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and a complimentary pass to one of these classes. Play, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. Investorschooling.com.
To Money Chat now, and I can see our technical difficulties are continuing. We're working on it. You can see we're rebuilding our set and we're rebuilding some new things around here, and they're making it really cool. But of course, just like everything, change creates problems, and we'll be working on those over the next couple of days. By the way, if you want to go to Investor Schooling, if you want to learn more about Investor Schooling, you can go to investorschooling.com, or you can call 866-424-2829, 866-424-2829. I want to thank you all for watching this special edition. That's a little bit late, and I know you guys on WWDB Radio, if you're listening on there, you're disappointed because you got a replay today. But listen, we're going to make this perfect, and we always make this show great. I want you guys, if you're online, hit that like button. Let me know you enjoy the show. You can also leave comments on Facebook, Twitter, LinkedIn, and YouTube, and I'll try to respond to them. Hey, I want to say hello to Tommy and Bill and Jeff. You guys are awesome. And I'm looking at some of your comments. They're pretty funny. Hey, Bill, let me know that Bill Spadia actually mentioned us a couple of times on his radio show today, and that's awesome. And we're going to be doing, as I said, I'm going to be doing a special edition of Money Chat Now, interviewing Bill Spadia today, right around 12 o'clock. So pay attention to that. That's going to be a really great show. All right, so far we've been talking about the futures, and right now the futures are up 163. The S&P is up 20, and the NASDAQ is up 75. It's going to be a good day today. I'm really excited about it. We talked about energy rationing and oil reserves. I'm telling you, Biden is going to be taking away these oil reserves, and we're going to be really sorry about it in a year from now. Right now, I'm not worried about it, but later, it's going to be really, really bad. Hey, don't forget, it's President's Day today, and if you didn't get that joke the first time, I'm going to repeat it until you do. We're also going to be coming up, we're going to be talking about auto sales dropping, Apple business, and of course, today's picks and plays. But come on, guys, hit that like button, hit that share button, and don't forget to leave comments on Facebook, LinkedIn, YouTube, or Twitter. And normally, if you want to be listening on WWDB Radio, we're here every morning at 7:30. All right, let's get into the second half. Let's talk about auto sales and what's going on there. Luckily for us, with the new oil and gas crisis, the American public is seeing an automobile shortage, so we really don't need to worry about that. We're going to solve the gas prices because we don't have automobiles. All right, all kidding aside. Well, actually, I'm not even sure if I could put all kidding aside, anyway. Anyway, if you're shopping for a car, you're finding it very difficult to find the car you want with the features you want. The chip shortage is still in full swing, and cars aren't being made fast enough for the upcoming spring market. This, of course, is leaving dealerships and car manufacturers with less inventory and less sales. I had a few people ask me about buying car stocks like GM and Ford, which rose quickly at the end of last year. they rose quickly because they're trying to compete with Tesla in the electric car arena, and many of the new EV cars are amazing. The problem, however, is the parts, mostly computer chips, aren't available or they're on back order. Of course, the manufacturers can't meet the demand of car buyers, and that makes the price of cars go up, but the manufacturers depend on a certain amount of projected sales each quarter. The bad news here is that the manufacturers aren't going to meet their expected numbers this quarter or last quarter that ended yesterday, right? My thought is that the automobile stocks like Ford and GM will all go down after earnings this quarter. The earnings are going to be bad, but if the guidance continues to be bad news, I wouldn't be surprised if Ford hits single digits again, at least for a very brief time, and if it does, it'll be a buy. Ford traded at almost 26 at its peak, and now it's trading about 17. Right now, I'm not a fan of the automobile stocks. And look, if you're planning on buying a new car, let me know. Put a comment in Facebook. Let me know you're going to buy a new car. I'd be curious to know what you're going to buy. Hey, let's talk a little bit about Apple business. Apple is riding the high of being the largest cap rate company. They touched the $3 trillion mark the first week of January, making them the richest company on the planet. We all know that Apple, we all know Apple for their great hardware products such as the Mac computer, the iPad, the iPhone. Apple, however, makes a large income from recurring revenue streams. They have subscription products such as iCloud storage. Look, I talked about the new iPhone subscription. I don't know if you remember. It's coming up next year, and they'll give you a new iPhone every time it's released. And now Apple has developed a new subscription service designed for businesses. The product is called Essentials, and it will be a product that helps manage iPhones that employees are using for business. The cost will range anywhere from $2.99 per user to $24.99 per user. The software will allow, maybe your boss or a system administrator to install corporate apps, set passcode policies, track or shut down a lost phone or a laptop, and it'll provide access to cloud storage. In the more expensive tiers, users will be given Apple Care credits so they can get repairs from Apple stores. Look, Apple's service business, it grew 27% in 2020 to $68.4 billion as the company introduced subscriptions like Fitness Plus, which gives users access to a library of video workouts. Most big businesses have discovered that recurring revenue is the way to build a successful business. Just think about how many subscription services you have now. I remember buying Microsoft Office or Adobe Creative Suite. You would buy the software, pay for it once, and you'd have it until you pried your wallet out of your pocket to buy the next version, because the old version just didn't work any longer. Now it's all monthly or yearly subscriptions, and you have to use them, and they automatically get upgraded, of course. Hey, listen, guys, let's take a quick break, and we're going to come back. And if you guys have any questions, feel free to put them up on Facebook. I've got a little bit more liberty today because we're not live on the air. So I'll see you guys in a minute.
Investor schooling. Those guys are everywhere.
Investor schooling. Those guys are everywhere.
Investor schooling.
Those guys are everywhere.
Investor Schooling. Those guys are everywhere. Register for a free class at investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse, and if you'd like more information on investor schooling, you can go to investorschooling.com. I am just riddled at the complex problems we're having this morning. It's actually kind of comical. You can call 866-424-2829, 866-424-2829. I like this. Mike says online, he goes, we talked about we're changing sets, and that's probably part of the problems that we're having this morning. And of course, I apologize, and I thank you all for being patient. But he writes, change creates problems, like Biden becoming president. That is really, really funny. I love it. That's great. All right. So far, we've been discussing the futures update. Right now, the Dow is up 177, the S&P is up 22, and the NASDAQ is up 80. We talked about energy rationing and oil reserves. We talked about auto sales dropping, and we talked about, of course, Apple business, the new Apple business. Coming up, of course, is today's picks and plays. And, hey, Did you guys hit that like button yet? Did you hit that share button yet? Let everyone know what great stocks are playing by sharing this information. You can share on your page or in groups. And remember, if you share it the most this week, I'm going to reward you with a free ticket to the Freedom and Finances event that we're going to be having on or in or whatever in Washington Crossing. And by the way, if you want to take a look at that, go to www.4mmw.com and you could be part of this event. I'm telling you, this is going to be a great event. Tickets are selling fast. Bill Spadia was talking about it all morning this morning on his show in New Jersey. So these tickets are going to sell out fast. Go to 4mmw.com and make sure you grab your ticket. Hey, don't forget to leave comments on Facebook, LinkedIn, YouTube, or Twitter. Let's talk a little bit about what's going on today. All right, right now, I got to tell you, right now it's going to be a good start, and I like it. I like the start. I like the quarter. I predicted it was going to be a good day. I'm really liking it. I think it's going to be great. We have earnings season starting soon, and that usually brings the market up. We'll all see a kickoff in the week of the 11th with bank stocks. So I'm a little worried about bank stocks, honestly, not because of earnings. My thought is earnings are going to be great for the big banks. So right now I think the earnings are going to be great for the big banks. My thought, however, is that the banks will report that they're experiencing a slowdown or expecting one. We will see usually when bank stocks come out, if they come out strong, the rest of earnings season usually comes on strong. So watch for that. The time to pick your plays is now. I'm going to say it again. Buy the travel stocks, buy the travel stocks, buy the travel stocks. They will be the last recovery play this year. Right, one quick check at the futures right now again. Right now the Dow is up 169, the S&P is up 21, and the NASDAQ is up 75. I'm not quite sure what those numbers are on the screen right now. They're not these numbers. I don't know which one's right, which one's wrong, but I've got 170, 22, and 76. But that's all right. Let's talk about crypto. Crypto pulled back a little bit when the stock market pulled back yesterday. Bitcoin is hovering around 45,000 and Ether is around 3,300. So gold and silver aren't doing much. Gold is about 1930 and silver is about 25. So hey, it's not that great, right? Ken's saying, hang in there, Larry. Hey, I'm doing a pretty good job for all these problems. All right, let me know. Let me know how good of a commentator. Boy, how good of a commentator am I with all these problems, and I'm sitting here doing a good job. I just want my ego boosted, so let me know. All right, oil is down to just above 100, and it should be moving downward. Obviously, while Biden releases our oil and puts us all at risk of danger, he's going to lower the price of oil just to make life better. The Treasury bond, the 10-year Treasury bond, is staying below 2.4%. And by the way, just for some perspective, if you guys didn't know, the bond rate in 2018 was 3.2%, so this might not be as bad as you think. Look, I want to thank you all for watching today. I want to thank you for your continued support. My apologies again for all the technical difficulties. But hey, I think we did a good show today anyway. I want to thank Mike. Mike is doing a great job in there trying to solve these problems today. You guys know my name is Larry Steinhouse. I am the host of Money Chat Now, and I am also the CEO of Investor Schooling. I want to remind you guys one more time, go to 4mmw.com, 4mmw.com, and make sure you sign up for the Freedom and Finances event. Also, from time to time, I have some of the assets and options discussed in this show, and the opinions discussed in this show are solely mine, and no one has asked me to discuss them. All right, I want you guys to have a great weekend and make it a profitable day.